Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng currently trading 0.6% higher. The Taiwanese index trading with gains.
It's 160 points higher. This is the market saluting the exit poll numbers. And of course, a little bit of enthusiasm around India, US as well.
The sense was overwhelmingly clear to us that the NDA has an edge.
25,828 is about 0.5% higher.
The markets which are actually doing far superior are the tech markets like Taiwan, Korea, China.
We now got an order for an underwater system that goes down to a depth of 1,000 meters.
The suit and ties on the one side, and then you have the new disruptors on the other.
Earnings looked very strong. Operating revenue has increased almost 11% on a sequential basis.
Liraglutide did contribute majorly to the 24% growth that we have seen this quarter. And
several issues across various sectors have already been discussed threadbare between both the sides as part of discussions.
The new generation has stepped onto one of the most powerful boardrooms of India, the Tata Trust.
And what a stellar rally today. We are above the 25,900 mark, third consecutive day of uptick on the markets. Mid-caps doing well.
Well, that is the day so far. Markets are holding with a 200-plus point pop. It's a good-looking day. It's on the back of the exit poll results. Maybe at the margin there was some anxiety. But I think that has been done away with. This is Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Rima here. Nigel is joining us from the newsroom floor. Guys, hi. Good afternoon.
Hi. So the exit poll results, and plus global markets are fairly upbeat. Even Europe, as we speak, is up close to about 1%. So third day of gains, guys, for our markets now, and it's 25,900.
It's a feel-good day, right? Because you've got all the secondary market action. The Nifty is galloping along, and then the A-listers from the primary space, we've had good listings, both grow, and even Tata Motors in its new avatar, there's been a fair amount of green. Quite a few of the earnings have actually hit the mark as well. Let's pull up Billionaire Brains Garage, 31%. So the market's really lapping it up now. And that's Tata Motors CV, 22% up on that one. So it's been good going. And then a slew of positive earnings. BSE would be a case in point. Something like a Biocon is up after numbers. So, it's not bad at all. Nigel?
Well, that's right. The day has been good. Headline index is good. And normally I quibble about, portfolios are not feeling too good. Today, the breadth of the market is good as well. You have two stocks that are advancing, but one stock that's declining. So that's good. And as you said, the new listings as well. However, just take note of the numbers that are at the bottom of your screen. HAL, we'll try to get a further analysis going. But in comparison to our poll, that it appears as a bit of a miss on the EBITDA number. Even the margin number is a few hundred basis points lower than what we're working with. So we'll try to get you further analysis. The day is good on the whole. HAL, I wonder whether there is any one-off in that operational performance. We'll get you further analysis, guys.
Absolutely. Just one more name, right? And this Bihar is done, hopefully. Exit polls, let's say, they hold. On Friday when the numbers come. The other, of course, next trigger in that sense is the India-US trade deal. And many have been of the view that, I guess for the lack of better guidance, that maybe this is, that deal is pending the Bihar elections, and maybe after the Bihar elections, we will see something moving on that front. Look at something like a Gokuldas. It's up 5%. So it's slowly creeped up back above the 900 rupee level, which is where it's kind of sold off. It's basically been in a 100 rupee band, 800 to 900. And it's done this round trip a few times. It's kind of sort of taking that out as we speak. So here's what's coming up here in the last 60 minutes of trade. Earnings, of course, listings, markets doing well, view what we'll try and get you a view on IT as well. The index is up 2%, the biggest contributor to what's happening on the Nifty. Grow will get you a valuation comparison more than anything else. I mean, how does it stack up against names like Angel, etc.? Zerodha, of course, which is the closest in terms of number of users, is unlisted, but against the listed ones, how does it now fare with the bump that it's got? We'll talk about the moves on, Thermax, Kirloskar Royal, etc. These are all at the back of earnings. and more. I mean, as we go forward, we'll of course also get you a view from the UBS conference where our colleague Nimesh is there and he picks up the chatter from there. How should you position yourself in the last hour of trade? Mitesh Thakkar is with us. Mitesh, good afternoon. Good to have you here. So, you know, the gap up holds and maybe even has built on it. What would you do now?
Good afternoon, Prashant. We were looking at 25,800. We opened above that and there was hardly any decline below that. And the low we got was 25, I think 780 was thereabouts. And as long as we were about to this 25,800, 750 zones, now I think a retest of the recent highs, which is around 26,100 should happen. And then beyond that, I think, one can look at a test of 26,270, which is the all-time high. So this is the way we are looking at. So the bias is on the positive side. The recent swing high of 26,100 is what I'm targeting to begin with. On the stock side, I have a buy on Tech Mahindra with a stop at 1439 for targets of 1490. And Nestle is a buy with a stop at 1259 for targets of 1350.
All right. In fact, this week, tech has been the biggest outperforming sector. It's a 5% rally on the Nifty IT index so far this week. And the other one is defense. The Nifty Defense Index is up almost 4%. It was holding up in the green, but now as we speak intraday, you can see that fall in the defense index, courtesy the decline in HAL, where there appears to be a bit of a miss compared to the margins. H1 margins are 25% lower than the company's own guidance of 31%. But the top stock today is Grow, and that continues to move up, 31% up. We have with us Sudarshan now joining in with some details about the numbers and how the valuations stack up compared to the rest of the brokerages.
So it was a good listing. Company has listed a premium of 12%. Issue price was rupees 100 per share, listed at rupees 112 per share. And at this point, stock is up more than 32%. So I've tried to find out what are the valuations against peers and what's the market share of the company. So just for example, Grow's market share is nearly 27%. And if you take a look at the peers market share, Motilal Oswal's market share is 2%, 361 almost nil, Nuvama 0.3%, Angel One is around 16%, and also Zerodha, which is an unlisted player, its market share is around 20%. So Grow is even bigger than Zerodha. Look at the valuations. Grow's valuation is around its FY25 PE, that is 33.6 times. Motilal Oswal around 25 times, 361 around 45 times, Nuvama around 27, and Angel One is around 20 times. Now, what's going forward? So currently, 83% of its revenue comes from the broking business, and MTF forms just 1 to 2%. Now, going forward, company is saying that broking business contribution will come down, and MTF's contribution, which is currently in the range of 1 to 2%, will increase up to 13% in near to medium term, and MTF is going to be the biggest growth driver for the company. But for now, after a good or healthy listing, stock is only moving higher.
Thank you very much for that. And they're also very bullish on the wealth business, which the company has recently launched, the wealth platform. So that's going to be the new focus area for the company. Sudarshan, thank you very much for that. Gurmeet Chadha of Complete Circle is now joining in. Gurmeet, the issue price was closer to 100, now up 30%. How does it look to you?
No, it's a very high growth business. If you see FY23, they were hardly doing 1,200 crores revenue. I think in 2 years, it's jumped to 4,000 crore, and they're growing much faster than the industry. And I think you will see even the broking revenue getting, the concentration reducing. They've got into the AMC business. And I think it's not just a simple discount broker. I think the tech team is very good. A lot of content-based selling is what is driving a lot of volume. So it's a new age business which you can't really compare with Angel One or Motilal or some of the other ones which have also done well. So I think it's something which should be added over the long run on the new age side. If you want to add 3-4 names, I think this should figure there.
Even at this price, Gurmeet, comfortable buying?
We actually got a little lucky. We did buy some unlisted shares about 6 months back at in 3 digits, slightly sub 3 digits in some cases. We will look at adding more as and when we get better price opportunity. Market is pretty volatile, so maybe listing day is not a good day in terms of perfect price discovery. But it is something, as I said, in capital market play in new age business we should like to add it over a long term profitable business. Except for the year where they shifted operations from US to India, they had a tax payment where they reported loss. And I think the AMC business and other revenue streams will start reducing the dependence on broking as well.
No, I mean, it's interesting. Does this provide, does this lift the valuations for some other players or not really? I mean, that always that relative angel at 17, 18 times trailing, as you heard Sud say, or I mean, much larger, right? Just in terms of share. And this is a network effect business. So, yeah.
I think Prashant, Motilal is something I think which in my view is a little undervalued. I think because if you see maybe a year from now, maybe the AMC business will contribute as much as the broking business. They are already at, I think, 1.5 lakh crores AUM, and the performance has been pretty good across mutual funds, AIF, and other categories of funds they have been doing. And AMC business will give more stability versus broking business, which is subject to market sentiment, a lot of regulations and all. So I think that's something we like, and I think there's valuation comfort there. They had a bit of a issue in their housing finance NBFC, which is now largely behind. So I think that is something we would like to look at. We also have it in our portfolio.
Okay, all right. So that is the broking companies and how the market is looking at them. Hi, Gurmeet, just stay on. We want to discuss financials as well, particularly insurance, because Max Financial is the stock on the radar. Even now, Max is up 5%. Last time I checked, clearly the market has liked the second quarter performance as well as the commentary. Let's bring in Yash to understand what's worked for Max this time around. Yash?
Well, first of all, of course, strong trade as far as Max Financial stock is concerned today. And the story was largely told by the second quarter numbers which the company presented post-markets yesterday. On almost all the fronts, except for one, the numbers were ahead of what the street was anticipating, were ahead of CNBC-TV18 poll. And one count where they weren't, they were in line with what the street was anticipating. So your total AP, your retail AP was ahead of street estimates. VNB came with a strong beat to CNBC-TV18 poll. Margins also came with a strong beat. In terms of absolute numbers also on a year-on-year comparison, there was a strong growth which was showcased by the company. AP growing by 16%, retail AP growing by 9%, VNB growing by 25%, and the margins growing by about 189 basis points, coming in at about 23.6%. This was largely told yesterday itself. What was left to be told, the management pitched in for that one, maintaining the guidance for the full year FY26, which is quite ambitious in terms of guidance, continue to say that they will grow 300 to 500 basis points ahead of the industry growth rate. The margins would remain on a superior track. And of course, some idea was also given by the management in terms of the reverse merger between Max Life and Max Financial Services. The management said that they are working on it. And if that does not work out in a situation where approvals don't come in, there's a plan B, which is already in place. So strong numbers. The stock hadn't done much before today, of course, flat on a 1 month and 3 month basis. And all of that working for the stock today, the management guiding for a strong financial year going ahead. Here's what they said to CNBC-TV18 in an interview today.
Across channels, there is a very good growth. We've always maintained that when it comes to industry, and yes, H2 is always far more stronger. When it comes to industry, we are maintaining our margin estimates. And even in terms of growth, we should come better than the industry by almost around 300 to 500 bips when we end H2 as well. In Q2, the VNB came at 25%. But when you look at the entire H1, the VNB is at 27%. This number, yes, is very much sustainable. There've been a lot of work which has happened post the GST 2.0 changes.
Okay, so that is Max Financial. Gurmeet, what did you think of the numbers? I mean, and if you're looking at taking some insurance exposure, then where does Max fit into the order?
No, I think the numbers are very impressive. And Sumit is my ex-boss. He hired me in Citibank. So, I mean, he was also instrumental in turning around IDFC First Bank when he was the retail banking head. So they have a good leader. And I think with Axis coming in, I think, hopefully should augment well. We will look at, we are reviewing it. We don't have it currently, as I said, this will be in the portfolio. We do have ICICI Lombard, where we are seeing incrementally the total ratio coming below 100, which means your underwriting income exceeds and takes care of everything and not just the investment income which contributes to the profit. And I think at some point of time, insurance has been a little out of favor for both life and non-life. So this is something we have in the portfolio. Max, we are reviewing in case we we do add, we'll definitely let you know.
All right. Hi, Gurmeet. Good to see you again. What about these capital market plays, namely exchanges? MCX has had a beautiful run, and BSE, just when everyone was throwing in the towel, the stock fell from 3,100 to 2,100. Guess what? Numbers are in. Volumes are pretty okay as well. The stock is back around 2,700 plus. What's your view on the exchanges? And between them, I mean, what do you like? The unlisted NSE as well as there.
So Nigel, I think I like NSE more at current price, although it's on the unlisted side. If you see at about 3,500 quarterly number, they would do 15,000 crore PAT this year. At current price of about slightly sub 1,900, it's 4.5 lakh crore, little 4.5 lakh crore. That's like 32 times, almost half, less than half of what BSE is. And I think with this change in expiry, they've lost market share in options. It stands at around 77%. But now with they getting Tuesday expiry and SEBI for now not doing much on weekly, I think some of may get gain back. So valuation wise there. But as I said, I think we like AMCs more, the CAMS and the CDSL more. Broking, I mentioned Motilal Oswal. So we have a fairly, so for financials is like 30% of the portfolio. About 10 to 12% is capital market play, which is CDSL, CAMS, a couple of broking names and AMCs.
Okay, that's on the capital market side. Finally, Gurmeet, before we let you go, Tata Motors, for the longest time, people had a problem that, what is this? It's too complicated. And what if you don't want to play the global global PV side with JLR, and maybe you only want to take a play on CV? So now you have segregated portfolios. What do you think of it? And from an investment point of view, do either parts of the business make sense now?
No, I think we'll have to wait for globally things to stabilize more. I think obviously there is value on the table in terms of it's corrected more than 50% from where it was. I think any pickup in Range Rover numbers, any mix improvement, once we have probably a proper deal with EU as well and US, I think that's probably will be a time to look at it. We like M&M, continue to like M&M. Their market share is now almost 27%. Tractors, they are 43%. Light commercial vehicles, they are more than 50%. Very good capital allocation. At some point of time, even M&M will, restructure the business like Tata Motors has done. May not happen in near future, but over long term. They made some good money on the RBL investment. They made, I think, a year back, more than a year back. The stock got hammered, and it finally proved to be a good business. So I like, because of the fact, I think the offtake of vehicles, the overall market share is improving. So we'll continue to stick with that. We are looking at more auto ancillaries to add. We have Uno, Minda. We are looking at even car trade with the acquisition they are doing now. KPIT, I think, reported very good numbers. It's done well in a tough environment. I think when auto overall picks up. So we like the value chain, and for now we are sticking with M&M.
Okay, all right, Gurmeet, we'll leave it there. Good speaking with you. Thanks very much for joining us. Appreciate it very much here on CNBC. Well, the market, I think, is 120 points high, which means it's given up about 25, 30 points from the high. We take a break. Ajay Tyagi is going to be speaking with us on the other side. He's, of course, from UTI Asset Management Company. So more market conversation and more opinion from that UBS conference coming your way as well. Stay tuned. Okay, welcome back. Ajay Tyagi is head of equity, UTI Asset Management Company. Ajay, great to have you with us here on the program. Thanks very much. By the way, do you guys have a digital fund, Ajay? Digital India fund?
Not quite, but we do have what we call as the innovation fund.
Same thing. I mean, not exactly same thing, but I'm just, but yeah, I mean, so it's made up of all tech and new age and platform companies?
Absolutely.
Yeah. So one more edition today, I'm assuming.
Yes.
Yeah, but it's doing extremely well, that entire space. Just a quick word, Ajay, in terms of, are you willing to give, I mean, take today's listing as an example, not about talking, buying or selling Grow, but are you willing to, it's a digital native company as opposed to many other companies in its space which are now turning digital, which have turned digital in that sense, right? Rates of growth have been far higher, I guess, because it started in 2016, right place, right time, UPI, Aadhaar, then digitization, demonetization, pretty much everything working for it. Are you willing to pay higher in terms of price to earnings multiples for these kind of businesses than what you would do for comparable businesses, older legacy, which are now turning around?
So we'll keep the recent listing out of the picture and out of the discussion. But Prashant, you have a very valid question. Let me give you the broad thought process that we have here. See, there are certain businesses and certain platforms which are absolutely redefining the way the consumers are actually conducting their transactions. Now, if you do have, and this could be spread across multiple different, subsectors. Now, if you have a business which is truly differentiated, where you don't have any substitutes, where, truly that platform has redefined the way consumers are now, buying and selling, then I would say we are ready to give a higher multiple because we know that there hardly are any substitutes, A. B, more often than not, many of these platforms, if not all of them, can turn out to be a winner-take-all model. And if it's not winner-take-all, they certainly could be one very large player in that domain, with the second person having not even half the market share. So therefore, there is massive pricing power and monetization once it kicks in. So with those principles, we keep hunting out for business models which are differentiated, for which there aren't many substitutes. So, within fintech, I would say that there are business models which have been innovative. Unfortunately, they still haven't been rewarded for their innovation. Digital payments in India are still not easily monetizable, and therefore, more often than not, these players end up playing the game which the existing large financial services players are playing already. So, I hope I've just laid out our thought process.
Talking about financials, Ajay, hi, afternoon, Rima here. Bajaj Finance used to be a fairly big overweight in your flexi cap fund. Is that correct? True. So it's had a very strong track record in terms of growth, outperformance, even stock price. But the Q2 numbers throwed up some chinks in the armor. There's deterioration to some extent in the asset quality. AUM growth expectations have been scaled down. Now, what is the advice for someone? Should they buy Bajaj Finance? Are you comfortable at this level? Or, wait it out to see how this plays out over the next few quarters?
I'm afraid we cannot speak about stocks.
But just the broad thought process, when you have a company, say Bajaj Finance or Trend, but they've got a few rough quarters, what do you do then?
So here is what we do. We go back and check our hypothesis. Every stock ought to be having a hypothesis, and we go back and check whether the reasons for which we were excited in the first place, are they still holding true? Is this going to be a hypothesis which will remain valid? Forget the next couple of quarters, but at least for the next couple of years. If yes, then like you mentioned, any disappointment in any 1 or 2 quarters to our mind is always an opportunity to buy. So, the base case always ought to be that the reasons for which we were excited are still holding to be true. They are still going to be, valid reasons for value creation in the medium to long term. And if because of near-term disappointment, stock prices are down, we actually try to take advantage of it. Yeah.
Ajay, hi. Good to have you in. Now, what about all the new age businesses? Either the recently listed new age businesses, that includes the likes of, your urban company, and we're talking about obviously Lenskart and Grow, all these exciting consumer-facing businesses. And of course, the ones that are now kind of maturing a little bit. And I'm talking about the quick commerce companies and the food delivery companies. How are you in general finding valuations in this whole basket?
So, see, new age businesses started getting listed from 2021. Eternal was the one which basically laid down the path for a lot of these companies to keep getting listed, eventually as they gained sight towards profitability. Now, what we've observed is that there is obviously a lot of excitement around the IPO and in the couple of months post the IPO. But there's always a moment of truth. Investors who are, longer term in nature, who are more cold and calculating, obviously want to also see how these businesses behave in the few quarters after listing. And, that's the point of time when we've seen, even for the best of companies, by the way, excitement die down, valuations climbing down. And to our mind, that's the best point to actually take a very cold and calculating view, whether it makes sense to build positions in them or not. So, there are two reasons for not swinging the bat too viciously right at the IPO stage. As for us, one, there is a bit of an information asymmetry. You don't understand the business as well at the IPO process as you do a few quarters after the IPO. Plus, like I mentioned, if you look at the track record of pretty much all of these companies starting 2021, starting from Eternal itself, they have witnessed post the initial excitement a phase of valuation correction. Yeah.
Yeah, no, absolutely. Point taken. By the way, just want to quickly highlight, some other names maybe which we've not looked at. BLS, that is Bombay, London, Singapore. That's a visa processing company, is up about 10%. Rima was telling me that they're starting centers in China.
So they've got a 3-year contract from the Ministry of External Affairs in India to establish and operate visa centers in China. And plus, they came out with numbers, and very strong numbers. The top line went up by nearly 50%.
I see.
So
China, India, China, flights just resumed. It's interesting. Did we speak with the management? No, we've not spoken post results. We'll try and get them on. Yatra, of course, another travel company, 11.5% higher on Yatra. So looking good. Biocon is shooting up about 5.5-6%. Stocks at about 400, 410 as we speak. So that's another one of those. Yesterday we had Tejas Networks. We were talking to Aditya of Incred on Tejas. He's liked it for a while. Of course, numbers once again for the quarter largely disappointing, but it's coming up. One of those moves, 8% in the green. Transformers, rectifiers crashed. From 450 levels to about recent low was about 280. It's coming up a little bit today. Global Spirits, the alcohol company, 6.5% higher.
Globus came out with numbers. So
Car Trade, it was that deal which we reported, buying the second, closest, largest competitor, which is Car Deco. So it's a big move on Car Trade today on the back of it. So there is enough and more. E-Cost Mobility. There's a sharp move higher, 16.5% up. I think they're basically into EV charging infrastructure. So not that old in terms of the listed universe, but it's doing well. There is Advanced Enzymes, Intellect Design, lots and lots of names with volumes which are coming up with strong price action. Ajay, if you were a betting man, what would you say? This India-US deal, November, December?
Looks to be post the election results and government formation in Bihar to us. Look, you guys are better tuned into these things, but if I were to really, get into a bet on this, I would say probably the end of November.
Probably the end of November. Okay, got that. Hopefully so. And are there any obvious places to focus on the back of it, or you think it's a general broad lift to markets whenever that happens?
See, certainly it's a general broad lift because if you look at the behavior of a lot of these global investors post July and August of this year, they did actually start coming out of India, or at least they stopped making incremental investments into India, basis the fact that, look, India was always supposed to be a close ally of the US. Therefore, India was always expected to get a very sweet deal from the US. But the commentary from the US government was completely against this thought process. So that obviously led to a lot of these FII losing interest in India from a near-term perspective. They went into a wait-and-watch mode. I guess the announcement of the deal, and if the tariff rates that we are hearing about, which could be sub 20%, is anything to go by, that should bring in the excitement back into the market at a very generic level. Of course, there would be those sectors which were thought to be more impacted because of these tariffs. Think of sectors like textiles, gems and jewelry, and so on. Those obviously come back into action, but at a more general level, it also lifts a bit of a cloud of worry on the entire IT sector, because people are extrapolating that there could be something punitive that could come on the IT industry, which is not getting covered by the tariffs as yet. So yeah, in general, I would consider it to be a big positive, not only from a sentimental perspective, also from a more fundamental perspective. Remember, we were all talking about the damage it does toward GDP growth. Hopefully, GDP growth estimates would get perked up because of the announcement of any such thing. Yeah.
Got that. Ajay, we'll leave it there. Good talking to you. Thank you very much, and appreciate you joining us here on CNBC. We'll take a quick break. We're back. Some short-term trading ideas with our technical experts on the other side. Stay tuned.
Welcome back. Still holding around 25,600. Lots of big winners today. Parag Milk is reacting to numbers, 13% up. Kirloskar Oil also 12.5%. We spoke about Max Financial. Rate gain is moving up. Yesterday, decline post numbers. Today, it's bounced back with an up move of close to about 4.5%. Century Ply, Wellspun Living, Info Edge, all these companies came up. Okay, by the way, before that, Asian Paints bottom line is up for you on your screen. It looks like a big beat. 1,018 crore on the bottom line versus the CNBC-TV18 poll of 870 crore. So it's a very strong beat coming in on the bottom line. Let's see if it's accompanied by an improvement in revenue and a margin expansion. The top line too, yeah, it's a beat of close to about 5% compared to estimates. So Asian Paints top line has come in at about 8,500 crore. We were anticipating a revenue growth of about 8,100. Margins were, let's just get the margins were seen around 16.3%, an expansion of 90 basis points. But the top line, we were anticipating about a flat revenue growth, 1%. But I think going by this top line, it should be a mid to high single digits kind of a revenue growth. Bottom line is a beat at more than 1,000 crore, awaiting the margin number.
Mangalam should be able to help us with more details, volume growth, etc. in a bit. 17.6% is the margin.
That compares with 15.4 year on year.
And 16 something, which was the expectation.
So year on year, there's an expansion of 200 basis points of margins.
Yeah. So yeah, I mean, stock's moving and on the move as we speak. 60 rupees now, 2.25% higher on Asian Paints. EBITDA number is all looking good across the board and good to see. I mean, the grand old daddy of paint sector performing well, doing well. So margin 17.6. It's a full 130 basis point beat as far as the
no exceptional is
concerned.
what we are told.
Okay, no exceptional as well. So these are good numbers, big result, and okay, there is one data point. FY25 Q2 same period last year had a one-time.
There was an exceptional loss.
Yeah.
Which is not the case this time around, and therefore that bottom line number looks fairly robust. But even at the top line level, I mean, it's a handsome beat compared to the poll, and the stock is reacting to that. Remember, Asian Paints has anyway had a good run. In fact, if we look at Asian Paints,
that's coming out, decorative business registered a volume growth of 10.9% with a top line growth of 6%. Improved consumer sentiment with supportive policy actions aided by early festive season. We overcame the impact of extended monsoon even in September. Broad-based growth seen across urban and rural. Even industrial segment has seen a double-digit revenue growth. International business up 9.9%. So looking good.
This is looks like a clean beat. And yeah, I mean, the point that you made, right? It was the monsoon season. And despite that, the numbers seem to be much better than what the street actually anticipated.
Also, if you just look at Asian Paints from a level of about 2,300, exactly a month back, I think it was the first, second week of October. From 2,300, the stock has moved very rapidly to 2,700. The anticipation is obviously that the second half is going to be stronger. And the fact that, or the hope that competitive intensity is reducing. Okay, decorative business volume growth, that's scorching hot. Almost 11% growth. I mean, okay, I think Mangalam will help us understand where that could have come in from. But wow, talk about a beat. That's probably the beat of the season. I mean, in terms of just volumes. Haven't seen that kind of volume growth from Asian Paints or any paint company for that matter in a really long time. So this is looking very, very good. It's very clear that there was that competitive intensity phase as Birla Opus was making its big splash and JSW Paints was making its big splash. But Asian Paints has persevered. They're perhaps the oldest or among the oldest in the game. And they seem to be sort of getting things really back on track, just looking at this. And this is in an otherwise dull quarter, a monsoon quarter. But these numbers are looking very, very good.
So just to put the volume
52-week high, by the way, on the stock, at 2,700 plus.
So just to put this double-digit volume growth in context, 10.9% in Q2. In Q1, it was 3.9. The quarter before, 1.8. The quarter before that, That's Q3 FY25, 1.6. The quarter before that, it was negative. The volumes had actually declined by close to about 0.5%. So it's been struggling on the volumes, and now you've got a return to double digit.
We've had a 6-month monsoon period in the entire country.
Has it ended?
I wonder who managed to paint their houses. Yeah, I think we've got Mangalam with us. Mangalam, 11% volumes. Where is this coming from?
Well, it's an incredible set of numbers that have come in from Asian Paints. The only thing that you can say is that the giant is back, and how. 11% volume growth. The street was working with a number of 4 to 5%. In fact, the management themselves had guided for high single-digit sort of volume growth coming in and double-digit in the second half of this year. In the second quarter itself, the company has gone ahead and reported a double-digit volume growth. My sense is a large part of that volume growth would have come from the lower end products as well, because it's an 11% volume growth. The revenue hasn't grown as much, though it's above street expectations, but it's not grown in line with volumes, which tells you that a lot of the lower priced products are doing a lot better. And typically in monsoons, what happens is that the exterior paints don't sell as much, interior paints sell a little more, and that exactly is not as value accretive as, say, some of the exterior paints as well. The EBITDA as well as the net profit, all of them above street expectations. So just 3 words: top-down beat for Asian Paints. And add to all of this, the belief that competitive intensity is now going to be coming down, or if anything, Birla Opus is not a disruptor anymore, more like an incumbent. So going forward, things are seeming a lot more comfortable. The stock itself, versus a 5-year average of 60 times, trading at close to around 51 times. Street likes it, and the stock has spiked.
Absolutely. Mangalam is a master of wordplay. So here's one for you, Mangalam. Wall-to-wall beat.
Wall-to-wall beat, or well, the shareholders would be saying "Mera wala green."
I think Mayuresh is with us. Mangalam, stay with us. Mayuresh, let's get a quick reaction. Stock actually is now up 4.6%. Almost all of the reaction coming in after the numbers have come through. Mayuresh, what do you make of the numbers? You heard Mangalam as well.
Afternoon, Prashant. No, I think it is a top-down beat, and Mangalam rightly pointed out, I think the volume growth much better than what the estimates on the street were. At the same time, if you're probably looking at the product mix itself, the expectations with rationalization happening on the GST front will bring about better volume growth as we head into the second half, including festivities, which are probably spilled over in Q3. And therefore, I think the large expectations from the market is reasonable volume growth going ahead, a better product mix. Input costs remain very, very stable as we speak, and competition intensity has probably plateaued off. So I think very good set of numbers by Asian Paints.
Mayuresh, the stock is still a long way away from the all-time highs. I don't want to jump the gun, but I think the record highs for the stock were closer to 3,500. Now, I don't want to say that is it time to look at those levels, or, will long-term Asian Paints believers come back or not? But beyond this quarter, would you be inclined to expect some of that aggression to come back from Asian Paints? And maybe I can toss that to Mangalam as well. So just very quickly, Mayuresh, your first thoughts?
Oh, absolutely. And in fact, I think the new entrant which had come in the form of Birla Opus, I think the numbers there seem to be plateauing as well. And that gives us to the thesis that if you look at the market share of organized players and the unorganized market share for the paint industry as a whole, there is still a long way to go. And therefore, I think better organized leadership stocks like Asian Paints might actually benefit, because they've got a diverse product mix to begin with. They've got a huge dealer distribution network. They're adding on value-added products as well. And they're innovating as we speak. Therefore, these attributes should probably aid earnings growth going forward.
I think these are exactly the kind of things that you'll find in management textbooks, right, Mangalam? Because you have an incumbent, a giant of an entity, and then you have two hugely deep-pocketed groups coming in, the Birlas and JSW. And if Asian Paints manages to pull this off, come back on its, in its own, it'll be quite something. But your quick thoughts on whether this can be seen as a bit of a turnaround, or it's too early?
So 2 points that tell me that this could perhaps be a bit of a turnaround. The first point is that after many, many quarters, in fact, if I remember correctly, around 6-8 quarters, since Asian Paints has actually reported an industry-leading volume growth. Up until the last, 6 to 8 quarters, you had most of the companies reporting higher volume growth than Asian. And Asian was under the garb of, its huge base that, okay, it cannot probably report a higher percentage volume growth than the industry. So that seems to have turned around. We got Berger as well. They were also about 1-2% in terms of volume growth. So a lot of the other players are reporting a lot slower volume growth than Asian Paints. So on that base, Asian Paints reporting 11% volume growth tells you things have turned. And the second part that I'm looking at is, Asian Paints had constantly said that in paint industry, it is easy to get top line, not so much bottom line. So if Birlas are looking to get operational profits, then their aggression when it comes to prices, when their further investments coming in may reduce. So that's something we'll be watching out for. And thirdly, they are no stranger to competition. The world's biggest paint company, Sherwin-Williams, has come to India and they've had to go back. Nippon hasn't done much, and they've constantly maintained that wherever there is competition, Asian Paints will go ahead and do a lot better over a longer period of time. Yes, there was a fair amount of disruption in the past, but now is where the game starts. So let's see how it goes.
By the way, Mangalam, thanks very much for that. Look at Berger as well. I think you briefly mentioned it, but look at the intraday on Berger. It looks much smaller in terms of percentage absolute gains, but something similar. It's a sharp spike, and I think it started around the same time that Asian Paints reported numbers as well. So 2.25%. Kansai and some of the others, I can't really spot, big moves, but you got Berger, which is up, and the smaller name Shalimar is up 3%. Asian, of course, is the one which has done the trick. So that is Asian Paints.
Even Indigo Paints, by the way.
Indigo's up.
Indigo's also up.
It's not a spike. Indigo's been moving.
I'm very interested to see what Grasim is doing. Okay, so Asian Paints doing extremely well, and Grasim at the low point of trade after Rakshit Hargave has left, and also the street believing that maybe the disruption isn't as much, and that's reflecting. So if you pull up both the Asian Paints chart and the Grasim chart side by side, that will definitely tell you the story of the day.
Indigo, Surabhi, as you point out, what's happened? I mean, I think we missed this last 3 days, 1,000 to 1,200.
So 23% gain on Indigo Paints.
Also, over the last few quarters, if I remember, around 6 to 8 quarters, Indigo also has been reporting industry-leading volume growth. In fact, they were one of the bidders for Akzo Nobel as well. Eventually, JSW pipped them to go ahead and take that stake. But Indigo also has been on a very low base. It's been doing a lot better in terms of volume. So you have Indigo Paints doing well, Asian Paints doing well, but pull up alongside that the chart of Grasim, and there you have it. That's the story of the day.
Yeah, absolutely.
The red and the green. Yeah. Well, you got both on the screen. Mangalam, thank you very much for that. Very, very interesting. It really kind of made our afternoon very colourful, to say the least. Big story of the afternoon. Big story of this earnings season, actually. I mean, is it the big comeback of Asian Paints? We'll see. It's definitely a quarter to remember. Okay, with that, let's hop across to Nigel. Nigel, what's happening within the F&O space?
Well, the market's looking up today, and just looking at the screen, I think we'll see some shorts being covered out by the FIs. Last few trading sessions, there's big shorts that have been added. So either the FIs are going to sell less today, or in fact, we're going to see some shorts covering. I think looking at the screen, both on the Nifty and the Nifty Bank, both of them are up and the open is lower. So it appears there's definitely a short covering bounce at play. The PCR, though, has moved up to around 1.3. It's moving gradually to the upper end of the range because the put writing, well, that's become very aggressive. 25,800 put, 25,900 put, both of them fairly active. The premiums on both those two strikes have crashed big time. And in terms of levels that you're looking at, you'll have to say now the Nifty's 20 DMA becomes a trailing stop loss. And the bulls will believe that we're on our way to fresh all-time highs, which is at around that 26,300 odd mark. So we'll have to keep an eye out on that particular level. Moving to a couple of other points then, the Nifty Bank is doing well, but it's still relatively underperforming. I think it needs to find its form, and maybe in the next few trading sessions we get to those all-time highs, which is just around 450 points away for the Nifty itself. Stocks in focus, well, you are seeing some fresh shorting on PI Industries, an otherwise good market. Stock has moved lower, open interest has surged up. Couple of other names, Bandhan Bank has come in for a bit of a short covering bounce, and that stock has been a rank underperformer, but today it's up. Open interest is down. Tata Tech as well, another stock that's been a big underperformer. Today there are signs that the shorts suddenly are scampering for cover on both these two names. And from the banking pack, Union Bank, there's good long addition that we're seeing on this counter. So the day looks quite good. By the end of today, I think we'll have to get the data points post market close, and I think it'll indicate a big short covering bounce has played out today. Back to you.
Okay, all right, Nigel, thank you very much for that. Well, with that, let's go back to Mayuresh with some more ideas. Mayuresh, we're going to talk about the overall market, but clearly Asian Paints just stole the thunder. Otherwise, if you talk about some of the other major, results of the day, anything stood out? Last 24 hours, I mean, there's been a whole host of earnings. In terms of reactions, as we're in the final leg of trade, I'm just going to quickly look at what's looking the brightest. Obviously, BSE, Max Financial, most of these stocks, Kirloskar Oil, all of them holding up with gains. Anything else that makes the cut for you on earnings?
Specifically, Surbi, if you ask me over the last 24 hours, I think BSE obviously, I think, had a very good set of numbers. And the expectation largely is that even if you're now moving to weekly expiries, the expectation of whether there was a significant dent in terms of the dates that moved against BSE, I think whether that creates a huge amount of volume and value dent, that probably didn't play out. So if you probably compare NSE numbers and BSE numbers, BSE numbers are a tad bit better. And therefore, capital market participants over a medium-term play, including platforms like BSE, should continue doing well, in our opinion. The other two numbers which stood out, which you mentioned, even Prashant, I think Kirloskar Oil Engine and Parag Milk. Kirloskar Oil specifically, if you probably look at the standalone numbers, the kind of growth that you've probably seen in industrial gensets, the expectations in terms of the power gensets expected to do well, the replacement market holding up in terms of margins and value, and the overall standalone EBITDA margins with working capital maintained at 35 odd days. I think the B2B numbers for Kirloskar Oil are priming up quite nicely. And therefore, I think if you look at the consolidated performance, including its subsidiaries, holding up very well. Even for Parag Milk, as an example, I think the core categories, which account for 59%, including the likes of cheese, paneer, ghee, have actually done well. Standard liquid milk, the procurement has been decent at 14 lakh liters a day, 38 rupees was the average cost. And therefore, I think the expectation largely is that with rationalization happening even on this front, volume and value growth should drive numbers even in Q3, Q4. In fact, even its peer, Hudson Agro, had a very decent set in the recent few weeks.
Mayuresh, stay on. Need to slip into a very short break. We've got about 9 minutes left to wrap up trade. It's going to close up in the green, but not quite at the day's high. We were up 200 points in the Nifty when we started trade, now up about 165. Get into a break. We'll come back.
Welcome back. Markets actually getting a little bit nervous towards the end. The Nifty Bank, as I was pointing out earlier, that's seen a bit of a come off from the top. Its asset has been underperforming. It's on the verge of moving into the red, actually. The Nifty Bank has seen a sharp downtick. That said, we're still in conversation with Mayuresh Joshi. Mayuresh, one of the disappointments of the last hour has been HAL. Yes, Asian Paints numbers are good, and we've got various other numbers beats. But HAL, the street is pinning its hopes on bigger and better things coming. And since defense is one of those, points of prime importance for our government as well as a nation, this one's disappointing actually on margins and profitability.
Afternoon, Nigel. So I think it's impossible for defense companies to probably have a consistent execution plan every passing quarter. And therefore, I think in the quarter gone by, it was a monsoon-ridden quarter, and there would have been some execution challenges thereof. Having said that, I think the kind of order book that HAL is sitting on, I think it's more than 1.9 lakh crores, if I'm not mistaken, and it is almost 6 times the trailing 12-month revenue, which gives a very, very healthy revenue visibility. That's point one. The second point, obviously, is that the kind of projects and contracts that are coming their way, LCA aircrafts, 12 Su-30 MKA fighters, light combat helicopters, naval utility helicopters. And therefore, I think this entire aspect in terms of not just the existing pipeline, the kind of capex that HAL is probably expanding upon, more than 14,000 odd crores in terms of capex for expanding capacities, will mean that the margins will get maintained around 30-31 odd percent. ROE should get sustained with reasonable execution over a longer period of time at 21-22 odd percent, with ROCs at 28-29%. So execution for a quarter or two might be off, but generally I think over a longer period of time, it's a damn good play as far as defense is concerned. So anybody holding should continue.
Okay, that's HAL coming down to the final leg. Very quickly, Mayuresh, before we wind up for the day, Bajaj Finance. Yesterday was a day of disappointment. Now, what did you make of things, and whether you'd still be a buyer?
So we continue to remain optimistic on leadership stocks like Bajaj Finance within the NBFC space. I think yesterday's numbers and the commentary specifically in terms of the AUM degrowth that the management probably gave out for FY26 is something that probably took the sheen off and the stock rightfully corrected. But if you look forward, I think if you probably look into FY27, the expectations of reasonable and strong advances growth coming through, specifically in core categories of consumer durables and consumer discretionary as well, I think that should start picking up steam as we head into Q3. The second aspect, obviously, is that for bigger rated and better rated NBFCs like Bajaj Finance, the cost of borrowing obviously becomes a lot more cheaper with interest rates going down. And therefore, I think with stronger capital adequacies and a strong control in terms of costs, the asset quality pressure should start waning off, automatically leading to better leverage and return ratios as well. So yes, I think a disappointing set in Q2, but expectation largely is that it should start recovering. And therefore, I think within NBFCs, we focus and remain optimistic on stocks like Bajaj Finance.
Okay. All right, Mayuresh, thank you very much for that. Well, with that, let's quickly start recapping a day that's been fairly positive for the market. 160 points up, not quite closing at the highest level, but nonetheless, it's been a day of solid gains. And the Nifty now at 25,850. So let's see what worked. Obviously, Asian Paints became the story of the day, 6.5% as we're finally closing out after that huge beat coming in the second quarter. Other winners included names like Adani Enterprises. Tech has had a great week so far, and that continued today as well. So Tech Mahindra, TCS, names like Wipro, even Infosys, HCL Tech, and I'm talking gains between 1 to 2, in some cases, 3.5%. Tech Mahindra is up 3.5%, so very solid going for technology. Other winners included the likes of HDFC Life, Bajaj Finserv, Bharti Airtel, Jio Financial. We had Reddy's and Sun Pharma from the pharma space had a good day as well. On the downside, Tata Steel came in for some profit taking, 1.5% lower. Tata Motors, the PV stock, as the CV and PVs get demerged. PV is ending at 402. Let's take a look at Tata Motors CV as well. CV is ending at 330. That's a 26% gain. And speaking of new entrants on the street, Grow had a fantastic first session. Over a 30% gain coming in on Grow as well. Well, final settlement would be around closer to 30%. So that's been the story on the large cap screen. But even on the broader market side, Prashant, I guess not too many disappointments. A lot of earnings getting a big thumbs up from the market today.
You know, it's a really long list of and I can spot about 15 names with humongous volumes, right? On the upside, as you say. And we'll sort of, highlight some of the gainers on markets forward, right? I mean, so it's a wrap on this edition of Closing Bell from all of us here. Goodbye. Thanks very much for staying with us. But Mayuresh is going to be with you, and we'll take you through markets forward in just a bit.